Here we go. Good morning, everybody, and welcome to the Morning Volatility Report. As I am Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Blog here. Why is bond volatility so cheap? We'll take a look at all of that. We'll even look at the junk bond fund as well, the HYG. You know, with Fed here, and usually in the past, bond vol prior to the Fed move has been relatively, it's been a pretty reliable mover, and also, you know, Treasury is so elevated because there's so much worry in the market right now about, you know, oil and everything else. So anyway, check out our blog, optionpit.com. Pretty soon on our events page, you're going to see our beginning boot camp. Mark and I are writing kind of a beginning boot camp class for late February. And with that, Apple, they don't like, I guess they don't like the earnings. They don't like the guidance. Half the company is the iPhone, or more than half the profits, it looks like. And for whatever reason, they can't get out of their own way. I think in our chat today, we'll look at, I think, ways to sell some of the volatility in here. It is a solid, you know, 8 to 9 points higher than it is normally after an earnings announcement. So, you know, I think there might be an opportunity for today to sell some of that. As far as the broader market's going, it looks like Apple being down 5% is just it's a drag on the NDX, less so on the SPX, drag on the Dow. That's what we've got. So oil is stable, market relatively stable. Again, just a smattering of little oil stocks. You know, stocks that are in, I'm beginning to look more at the stocks that feel like they're, you know, at risk. RIG, PBR, and where is UPL? So these are like all the ones that, you know, basically not being able to make interest payments, things like that, which could be a lot rougher for those companies if oil prices stay where they are and oil exploration basically stops, which is kind of, or the budgets, a lot of those budgets have been slashed, you know, 50% or more. So at this point, where oil goes, so goes our market. It hasn't really changed. If you see crude tick up today, the weakness is the earnings weren't bad, but they don't like the guidance. They still beat earnings. The company's still generating tons of cash, and it's probably the cheapest utility in the world, the cheapest, most expensive utility in the world. We still are in backwardation. Okay, that's the reality. It has not changed. So the market is tied to other things. Okay. CLR warned today they can't make money under $37. Well, that's where we are. So as long as the market is tied to the price of oil, we're going to be as volatile as oil is, which is, I think, the reason why VIX hasn't gone down. It's taken me a while to figure it out, but I think ultimately that's the reason. But it doesn't look like we're going to crash. We're just going to be kind of volatile around the middle. So again, we've been looking at iron condors. I think, you know, that rally, say for the Fed today, whatever they're going to say, they're going to change their mind from a month ago. It's going to look kind of dopey. Again, considering everything that was in place in December hasn't changed. China, basically the stock market's going down. The economy doesn't look as good as it did, but it doesn't look like it's going to zero. Just the stock market looks really bad. Oil keeps going down, which is pressing prices down. Right? And you've got expanding budget deficits. Those are kind of the same things that have given the market fits over the last couple years. In Europe, it was the sovereign debt issue, remember, 3 years ago, which seems to have kind of gone away, and now you can buy all the You can buy all the Spanish paper you want for no interest. So you think about it, and those are the issues that have been around, and it's just us basically tied to the price of oil that's moving the market around. It's just we are starting to see, though, for VIX, like less and less. We're not making, and I want to get the tick chart out here, we're just not making the same. We're not making the same highs. Okay. 5-day chart. Okay. We're, when things kind of go wrong, we're just not seeing the same type of jump and ball. Okay. So on a day like today, post Fed, we could see SPX down and VIX down. Okay. Which to me would mean we're kind of stabilizing. Maybe the market's thinking oil stabilizing, and where we go from there, who knows? But again, that's what it feels like. So I think there is some volatility to be sold, and we'll look around today for some opportunities in our chart. All right. But Apple earnings weren't bad, but the market they don't like the phone sales, it looks like. But I think there is an odd vol selling opportunity here, so we'll look around. All right. Everybody have a good day. Don't be surprised if by the end of the day, volatility is lower after the Fed says whatever they're going to say. Right? The market's looking for dovish. They'll probably get something dovish. All right, everybody, have a good day.